G'day everyone, welcome back to Pete's Investing, July 11, 2023. This is a US Japanese yen currency update. On our weekly, we're in bullish momentum, whereas on the daily, we've hit this resistance up here and it's currently in a bearish movement. And we've got a couple of divergences to explain to you on the daily and also on the hourly. So first off on the weekly, you can see here our oscillator is still showing a bullish momentum. However, the CCI and the moving averages are turning down, and very likely we're going to see our oscillator turn down as well in the coming days, possibly, if this continues. On the daily, we did draw this bearish divergence on the CCI, and that is hard to see, but it is a, if I blow that up, you can see it very clearly, it is a bearish divergence versus a bullish divergence on the price. In fact, it actually hit this resistance which we drew some time ago at 144.60. And it's starting to retrace back now, and it's hit our target on the daily chart, and that's the Fibonacci level target. So on the hourly, we did have a few divergences that worked out. There was a bearish divergence here, bullish there, very small one. Retrace back, hit our target down at this area here, hit two levels of the Fibonacci level. If we drew a Fibonacci range in that range there. And more closely, we had a bearish divergence here versus bullish up here. Hit our peak. At that point, the CCI kept falling off, and it eventually hit our target, and that would have been around a 23-38% Fibonacci retracement from that range there. More closely today, we're projecting a rise in the price. So here we've got a bullish divergence on the CCI versus a bearish divergence on the price. Now this may continue. If this continues to the downside, so long as we still see the CCI maintain levels above that area there, that's what we need to see. So in other words, the CCI can still drop off as long as it's higher than that area, then this is still going to play out. So as soon as it starts turning up, and the way you'd measure this, let's assuming it turned up today. There you go. The next candle just opened up as we speak. So if this starts turning up from here, what we do is we draw a channel from that divergence range and bring it up. Come on. Let me do that again. So we draw a channel in that divergence range to the highest candle in that divergence range. So we need to see the price break out of that channel. That'll be your entry point. And then target will be that range, the Fibonacci range, up to probably that area there. So we would have, let's assuming it broke out, the price broke out about there. If it reversed today, then our target area would be at the at least that 38% to the 50% level, or even higher. Now, I always go for the closest Fibonacci to improve your probability. Of course, a lot of these do actually break lower or higher than the projected target. So if I remove that Fibonacci, you can see there, for example, that was my initial target area, but it fell lower than that. And back here, likewise, I had two target areas there, and it fell lower than that as well. So again, I use the closest Fibonacci range to improve my probability of success. So it's a small pip movement, but again, it's all about probability. So that's where we are today with the US Japanese yen on the divergence. And now again, these are independent from the daily and weekly levels, but we also do trend trading, and that's based on the weekly and daily when they're aligned. At the moment, they're not. So to see some more trading strategies using the trends or divergence, reference the links in the description below. Subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.